When I was unprofitable, I used to take losses on trades that seemed to be exactly the same as my winning trades, but it wasn't actually until I learned to align price with the aspect of time that I recognized the difference and was then able to avoid those losses and eventually become profitable. And that's exactly what I'm going to show you how to do today. So let's get right into it. First, if you don't already know, I'm going to go over a brief explanation of my model without the aspect of time. So I essentially look for price to build up some kind of liquidity and take that out. So this is a bullish example. I look for price to take out some kind of liquidity. Maybe it's an old low like this. And then I essentially wait for price to build that bullish order flow, which is where I get my entry. So I'll enter somewhere within here and then I go and target some kind of liquidity, right? So like an old high, or in this example, I've drawn out equal highs. So this is what I look for in price, and that has to be within a higher time frame trend. So for example, if the 4 hour was bullish, I'm essentially looking for this model within these legs here to the upside. Now, occasionally I have a retracement trade because there's a clear internal range liquidity target, but the majority of the time I'm trading with the higher time frame trend. So that is essentially my model before you bring in the aspect of time. So what does that actually look like in a real example? So we're on EU here on the daily. You can see that we've been printing a lot of bearish candles. We've been very bearish, and we've taken out this external range liquidity target. So given that we've taken out major liquidity, we've played out the weekly cycle. I use those a lot. We have Monday, Tuesday, Wednesday, Thursday, all impulsing to the downside. Going off the weekly cycles, it now makes sense for price to give a bit of a retracement on Friday, some internal range liquidity. Okay, so that essentially was what I was anticipating. And if we go on to the 4 hour, you can see that price was building up this bullish order flow here, which essentially was confirmation that we are going towards this internal range liquidity target. You can even see that we formed this bullish order block here. So now within here, I'm looking for that model that I just explained to you, right? I'm looking for price to build up some kind of liquidity or take out some kind of liquidity and expand to my target. So you can see here on the intraday, we have this FVG that price has tapped into and is moving away from. And on the lower time frames, you'll be able to see that we took out liquidity. Price took out these equal lows into that FVG. And then we started to build bullish order flow, right? Because we have these 4 consecutive down candles here. They got closed above and price returned to them and started to push to the upside. So we're building that bullish order flow. So if we're going purely off of price without the aspect of time, this is my model to the T. We have the higher time frame bias, the buyer zone, the liquidity sweep. We're building bullish order flow. So just going off that, price in your head ideally should be targeting this liquidity here. And this is what I used to think before I was profitable. But now if we go ahead and let this play out, you'll see that this fails, right? This idea fails and price returns back into the range. And we actually end up taking out this low here that we was expecting to hold to the target. It was these kinds of trades that I used to get caught up in and end up losing. If you go through a bunch of different examples of trades that played out, you'll see things just like this where price pretty much engineered a setup and then ended up taking it out. And all price really is doing is engineering more liquidity for the real move, right? It's just getting people trapped in the market, taking them out before you go and get the real move towards the liquidity. So how do we actually go about fixing this? Because until I fixed this, I had no chance of being profitable because I was just taking too many losses. And this is where timing really comes into play. Now, I only operate within London kill zone and New York kill zone. Okay, you'll see London is this purple box and New York is this orange box. I only operate in those timings. Now, you may or may not have seen a previous video of mine. It's called Win Rate Boost Part 7. And I essentially explain and go through the examples that prove that there is a high probability that the liquidity for the move is going to get taken out within these kill zones, and there is a high probability that these kill zones will run to the target. So these two things, right, the liquidity sweep and the liquidity target, are two very, very key aspects to my personal model, right? If this is what I'm looking to catch and position myself within, and that happens within the kill zones the majority of the time, then it makes sense to operate within those kill zones. And this really is what made it click for me, right? Once I understood this, yeah, my frequency dropped, but I was taking way more high probability trades and the trades are just way more high quality. So how do I actually go about using these kill zones? Well, I use something called daily cycles. I have 7 or 8 of them that I use, and essentially they're frameworks that incorporate the kill zones and price. Okay, so it literally aligns price with time perfectly, literally as it was meant to be. So in this particular cycle, I was looking for London to impulse, and as you can see, we got the impulse in London, and then for price to retrace for New York, and then push to the target within that first hour. So that is the daily cycle I was looking to use. And if we actually go about looking for this and implementing it, you'll see that there was no way in hell that I would ever have taken this trade within here, right? Because it doesn't align with the kill zones. It doesn't align with the daily cycles that I use, which are now an absolute necessity. I don't trade without them. And you can see, right, it's in between sessions. So we wouldn't have taken this trade. Instead, you would have waited for that New York kill zone to go and complete the criteria of the daily cycle. And you can see that we even gain more, essentially, confluence on the trade because we build up equal highs in between the sessions, right? And you'll find that this happens a lot. When you're not trading within the kill zones, a lot of the time price is just going to engineer liquidity to make the actual move, right, within the kill zones, within the daily cycles, more high probable. So you can see we build up these equal highs. We generated this old low, right, which would have in the past caught me out. But now that's just the liquidity for my move, right? I'm happy that that gets created, and price takes that out. So now price is completing that criteria or that first bit of the daily cycle that I want to see. And from here, I essentially go ahead and look for an entry, right? So if we go on a 3 minute, you'll see what do we get after price took out the liquidity, right? We took this liquidity and now we're building bullish order flow, right? Because we've formed this bullish order block on the lower time frame and we're pushing to the upside. So if we were to, reference the model that I'm looking for within this, right? I'm looking for price to build up some kind of liquidity, right? And take that out, right? Which is what we've got here. We've built up liquidity and we've taken it out, right? It's the exact same thing. And then I'm looking for bullish order flow to be built. You can see here, bullish order flow is being built, right? We've formed this bullish order block. And then I'm looking to enter off of some kind of bullish PD array within there. So my model here is being presented perfectly. Now, what makes it high probability, again, is the timing, right? The fact that we have the daily cycle is what makes it high probability. Without the daily cycle, it's nothing, because this trade, without the daily cycle, it was nothing. It failed. So yeah, that is essentially how I've been able to cut out losses and become profitable using alignment of price and time, right? You can see we form this bullish FVG here. You can simply enter off the FVG. SL can go here. If you wanted to have, a fixed risk of like 1 to 2 or something, you'll see that that gets absolutely smacked, right? Very, very quickly. In New York, you reach that higher time frame target. You avoided the fake out. They used to catch me out all the time, honestly, all the time. And yeah, now I'm able to identify very high probability trades and keep my win rate high. Now, if you want more tips and tricks on how I align price with the aspect of time, I created a free PDF. It's called the Ultimate Price and Time Guide. If you want it, I'm going to leave a link in the description. You can go and claim it absolutely for free. And if you want to learn more about daily cycles, I'll leave a link to that in the description as well. And yeah, I hope you found value in this video, and I'll catch you on the next one.